So today we're going to talk about a stock that entered the 300% return club yesterday. What a performer it's been. We're going to talk about how it's managed to get to that sort of return. And then also I'll identify some stocks that I think could be the next stocks to enter the 300% return club as well towards the end of the video. So we'll get on that today. Before we do, just a quick shout out. If you are a Patreon member, I did just drop an exclusive video yesterday on Adobe's earnings, which I actually thought were very impressive. So you can get my full thoughts on Adobe's recent earnings. And if you're on the Patreon member, the video is up. If you do want to join, link in the description, guys. You get 2 exclusive videos a week on there. You get to know what I'm buying and selling in real time. And you get a Discord with 600 members on that talk about stocks every day, including me. But let's get on to the stock. So the stock is Sofi. What a performer this one has been. In the year to date is now up 110%. And actually, in April time, you could have got this stock at the $9 range. I think I bought once in that range, and maybe I should have bought a little bit more. And since those lows in April, the stock has been on a fantastic rally, up 213%. But even before that, I've been a shareholder in Sofi for quite a few years. Started posting my first videos on Sofi around about 2 or 3 years ago now, and obviously it's performed amazing since then. So we're going to look at why Sofi has performed so well, what have been the factors to help it perform so well, because you guys know me, normally I aim for 2 to 5 years and I aim for 100% return. So how has this performed so well before that time period, and also how has it overachieved my return that I was expecting to do? We'll look at those sort of things here. But first of all, I just want to say, these are the stocks that make a big difference to your returns, because we were speaking about it yesterday, and sometimes, those 10x stocks, the game changers, like they can be mega, wealth builders for you if you do get a 10x stock. And every so often, every couple of years, you might get one of those 10x stocks. But these 2Xs, 3Xs, 4Xs, these can actually come around more often than what you think. You can probably achieve one of these maybe even every year. And if you get one of those stocks that comes those like 300% returns, it's great having the 10Xs, and, that's absolutely game-changing money. But very quickly, if you get some of these like 100% returns like Sofi, they make big differences to your returns in the stock market. And you can certainly, find these, a lot more often as well with the likes of Sofi. So yeah, if you can get some of these, they're absolutely, fantastic for you, and really do help your returns here with Sofi. One more point I want to make actually before we get on the video as well with Sofi is that the really interesting thing with Sofi is that even when I started buying the stock, back in 2022, it's funny because, realistically, the stock even went 2 years with staying stagnant. And, a lot of these stocks like Sofi, they got absolutely smashed in the 2022 stock market, and they just went incredibly cheap. But with a lot of the stocks that got absolutely smashed in the 2022 stock market, when we got out into 2023, a lot of these stocks, really started to, bounce up a significant amount. But the interesting thing with Sofi is that Sofi didn't do that. Sofi actually stayed through the rally in 2023 pretty stagnant. And even into really mid-2024, it was still very much stagnant. So we saw a lot of these more growth type stocks get absolutely smashed in 2022, which that's why you love stock market crashes, because they can create really good opportunities in stocks. But by that time, a lot of the growth stocks that got smashed in that time frame had already started rallying out. But with Sofi, it was a bit different. In 2024, mid 2024, they still were pretty much down after the lows at where they got smashed in 2022, and really since that time frame, the financially we're still absolutely smashing it. Like, if I can just show you on Simple Wall Street and show you here, you can see that, the revenue was dragging up, the profitability was starting to really drag up on that point of view. And, the market just totally ignored it. So you actually had a little bit longer to buy Sofi than maybe the other stocks. And it does show you, in this game, sometimes, you got to have patience. You had to wait, 2 years on this stock, and then eventually, boom. You get all those kind of returns coming in here, which is obviously really key to say. Now, Sofi. So you guys know me. I aim for 100% return over a 2 to 5 year period, but we're about 3 years in, and we've already got that, and we've actually overachieved it because we've got a 300% return with Sofi, which has been a great performance. And the fact that it's also such a large holding in the portfolio, and it's done that. Those are where it really lifts your portfolio. So how did SoFi overachieve what I expected it to do? Well, there was a couple of things. So the first thing is pointing out that the revenue growth. I forecasted something like a 15 to 20% maybe revenue growth. Maybe went a little bit higher into like the maybe 22, 23% revenue growth on my high side. But you can see these guys, they've pretty much overachieved it. This year they're going to cross the 32% year over year growth, which is obviously, significantly higher than what I expected, which is great. That's why you want to be a little bit conservative. And then if they do end up beating your numbers, you're a happy bunny. It's probably going to achieve a little bit more on your upside. 22% growth even on next year, but I expect them to probably hike that up, knowing what SoFi do. And that's probably another thing that I actually didn't put down in my notes on the video before I recorded it, is that what also helps is companies that beat expectations and hike up guidance as well. That's also a very nice positive. But the other thing is the levels of profitability. I think I forecast by 2027 or 2028, I expected SoFi to get to maybe to like a 10% profit margin. But if you do look at SoFi right now, their profit margin has far exceeded already where I thought they would get to. So they're already at like an 18% profit margin, and that continues to ramp up in the next few years. So that's another thing. They've achieved higher levels of profitability than what I originally thought they would end up doing as well, which has been great. And the other thing that's helped them is metric expansion. Now, there's a book that is called 100 Baggers. If you've not read that book, it is 100% worth reading that book, because it changed my opinion on investing quite a bit. And quite often, you get so caught up on forecasting, revenue growth and profit growth. But really, one of the big things that will change how much your return is in the stock market is metric expansion. And that is a massive thing that happened with SoFi. So with SoFi, I thought, banking stock, well, I guess banking is a bit harsh. That's what a lot of the bears used to say about it. But I guess it's a bit more of an online banking stock, fintech stock, isn't it? And I thought the metric this would trade at would be probably around about 30 times earnings. Now you can see today, SoFi is double that. SoFi is currently trading at 60 times earnings. And if you look at the metric expansion that SoFi has gone on this year, you can see that SoFi came in around about at the start of that, before that big rally that it went on in about March time. It was trading about 27 times earnings. But as the year's gone on, what we've seen the market do is we've seen the market throw SoFi from 27 times earnings to 36 times earnings. And now we're at 60 times earnings. So it's trading at probably a double premium than what I expected it to do. Now, the thing is that this is what I said when I was making videos on SoFi earlier, is that, I was valuing a 30 times earnings because I thought that was a fair valuation for a company that's grown at these levels. But when I did those videos, you'll see me say, look, there is the chance that the market does throw this to a lot more of a premium, like, 60 times earnings because of the growth levels. If it does that, I'll be happy, but I'm not going to factor that in. But if it does, that's where you could have a real big winner on your hands. Now, as we see with the market has factored in that bit more of a premium. And when that does happen, happy days. That's why I always like to be conservative. And then if it does happen, we make more money than what we thought we were originally going to do. And that's what's happened with SoFi. And that's what is key sometimes, is that a lot of people talk about revenue growth, profit growth. The big thing is what the market decides to value it at. Sometimes the market can throw a stock and hate it and throw it down to stupid levels, and then it can love a stock and it can throw it back up to a premium. And quite often, that's where you get the big moves in a stock in a year, where on the downside it went, let's throw it down to these sort of levels, and then eventually goes, we love this stock, let's put it back up at premium. And that's a bit of the case with SoFi. Is the market originally threw it at 30 times earnings this year, and then by the end of this year so far, it's decided to actually throw it to 60 times earnings. And that's ultimately like where SoFi is probably, beating my expectations, is that it's grown a little bit faster. Its profits ramped up a little bit faster than what I thought it would, but the market's thrown it to a bit more of a premium than what I thought it would. And that's how sometimes you can forecast these stocks to do well, and sometimes it can really, beat your expectations, which is obviously great if that does happen. Now, moving across to what could be the next stocks. What could be the next stocks, not to achieve 100% return, but which stocks could be the next kind of 200 to 300% returns in the portfolio? Well, probably my number one contender right now is probably this guy, D Local. It's been on a little bit of a run recently, which has been good. I still think it's not too bad value at all. When you look at D-Local, it's currently on 2026 numbers, trading at 18 times forward earnings. So like we say, if the market all of a sudden decides, you know what, D-Local, you should be 60 times earnings. Well, obviously, if you can see from there, that's an incredible upside from a metric expansion point of view. But with D-Local, they're actually growing faster than what SoFi is. So if you look at D-Local, 37% growth expected this year. Next year, 24% growth expected. So obviously, they're even better than where SoFi is at right now. The only difference between someone like a D-Local and SoFi is that you got to remember the area that D-Local operate in, and will that affect the metrics and put it down to a lower metric? Potentially. So that's always something you got to consider with D-Local here. Other argument, though, for a positive for D-Local is that they have a better balance sheet than SoFi, and they also return a lot of capital back to the shareholders and SoFi through they've got. If we just were to have someone like a look at D-Local, for example, and we just have a look at their balance sheet and their profit margins. Let's have a look at it. So you can see the profit margins are pretty significant on D-Local here already. Yeah. Pretty good. And also when you look at the balance sheet of D-Local, they've got a pretty nice balance sheet, as you can see here at the moment. Nearly 570 million of cash. So yeah, and hardly any debt. So that's also another positive. The next one is probably new holdings, which is obviously very similar to D-Local with the area that they operate in. I think this has very much similar case to where D-Local is at. Low valuation, metric expansion, very good growth, good profit margins, and also Mercado Libre. Funny that all three stocks are in the kind of same area at the moment. Now, I'm saying Mercado Libre from a point of view that I'm already up like nearly 100% on Mercado Libre. So for it to double, I think it could double up again, and that would obviously push me into the 200% return range, and then obviously start moving on to the 300% range. Right now, from the current levels, I don't think it's as achievable for Mercado Libre. But if you were asking me like stocks that from where they're at right now, where they could completely do it, that would be looking at D-Local and new holdings. UK stocks, I'm not sure on any UK stocks that maybe have that potential. Audio Boom would maybe be my best guess at the moment. If you look at Audio Boom, if it does fall down to a forward P of like 23 times earnings, and then the market decides to throw it up to like a 40-50 times earnings, and they do start getting that growth back a little bit, maybe it could be D-Local, maybe be Audio Boom potentially. The other one that might be the outside bet is AMD, depending on how good these new products are, and on that revenue growth, and also 26 times earnings. If they do start to ramp up to the 20-30% revenue growth, the profit starts ramping up, could the market throw AMD up to a 40-50 times earnings multiple by then? Potentially. AMD maybe be one that is there. So that's what I'm thinking. Quite often though, some of these stocks that end up being really performers come out of nowhere, and you're like, oh, maybe that was it. And quite often you can have them already in your portfolio and not realise. There's plenty of times that I've had stocks before, and I've been thinking like, oh yeah, it's got that much upside, and then they surprise you and they end up being mega performers, and you just never know. And sometimes they can be the most boring stocks. Quite often, and even right now we're talking about SoFi being an absolute mega performer, but they're not always growth stocks either. Sometimes they can be the really boring stocks that end up being certainly good performers as well. So don't get into a mindset as well that it's just these boring the growth stocks. Sometimes some of the boring stocks and stocks that have been absolutely slaughtered, and if you think you're dead companies, if all of a sudden they come back to life, those also can be really good performers anyway. So yeah, I hope you enjoyed the video, guys, and also a little bit of a celebration on the SoFi returns, and also maybe a bit of information about how it managed to perform so well that might be useful for you, and then also just talk about potential other stocks that could do quite well that could be the next kind of SoFi as well. So hope you enjoyed it. Thanks for watching. See you in a bit.